everybody. Welcome to the Trading Market Technicals Morning Call video for Wednesday, November 28th. We did get a little bit of a move lower. That came on the heels of Senator Reid stating in midday that they are well behind resolving the fiscal cliff. And sure enough, markets sold off. But the markets were basically chopping around pretty much all day. It was a very, very quiet day up until late afternoon when that statement was made. Then markets ended up selling off a little bit, recovered, and then at the end of the day, the markets pushed lower, closing the Dow down 89 points, S&P down 7. Dollar actually took a little bit of a bounce up 24 cents, and NASDAQ down 9. So the problem with the fiscal cliff and uncertainty is still out there, and that's going to definitely loom on the markets. However, we are getting that little bit of a pullback that I'm looking for. It's been a very benign pullback, which is actually bullish. Volume is extremely light, again bullish. So I'd like to see a couple of days of selling, some deep selling, pushing this market a little bit lower, and then we can look to buy going into the end of the year. Now, remember, things can change at any moment of what's going on out there. We still have lots of intense cooling off in China. A lot of those emerging markets are actually starting to cool off again. That's starting to come into play. The Eurozone, they said Greece has agreed to the bailout. Sure enough, they sold the euro, selling the news. And that is going to continue to be a problem until it is until there is some sort of resolution, a concrete resolution. Last night, Shanghai Composite hits new lows. I'll show you that picture. That's not good. So we do have a lot of looming factors here in the markets to really catapult us higher. Now, I'd like to see, again, this market start to roll over a little bit, get a little bit of a bounce going into the end of the year. But I do think that 2013, at least the beginning part of it, may look pretty ugly. And then we'll have to reevaluate then, as we all short-term traders. So let's take a look. We'll go right into the charts. Really, not much has changed, guys, and I'll show that to you. Our little NYMO, great signals lately. If you're not looking at this on a daily basis, you should be. This year, we had that sell signal. We closed outside of our Bollinger Band, and then we rolled back in, and sure enough, we got that sell, that little bit of a sell-off yesterday, helped by Senator Reid. And I think the market does pull in a little bit, hopefully back in down to this area, this oversold area, where we can actually start to really buy with two hands in that oversold area, giving us risk-reward, much greater chance of our trade succeeding. Okay, now let's take a look at the Shanghai. Terrible. Absolutely terrible. As you can see here, there is no strength in Shanghai. And charts don't lie, guys. The news does trump the charts, but eventually they will readjust itself and move lower. China is having issues. Asia's having issues, and that is not denying it. And again, we're going to have that big, we're going to have a nice big trade in the China trade coming. Probably going to be the beginning of next year, because I think most of the trading ideas will probably be ending up being to the long side if things stay the way they are. Okay, let's take a look at copper. Now, copper didn't do too bad based on a little bit of a sell-off, but as you can see here, a couple of dojis, some nice consolidation area here, and you can even look at this as an ascending triangle. So if copper can maybe break down to the 20 and then pull back up again, a lot of overhead resistance here, as you can see, 50 to 200-day moving average, and again, our horizontal, our heavy horizontal resistance right now, testing that, as we can see here, but again, not breaking out. Take a look at the dollar. Now, here's where I say, I've been saying for the last couple of days that we're looking for a little bit of a pullback. And really not enough to get short the market, only because we have not moved really anywhere up until yesterday. And that was really at the end of the day. So why? And that's because we ran really hard the last 6 days, 6 or 7 days of the market, equity markets, and the dollar's at key support areas. And as you can see here, if you can look at this area here, the support areas, heavy support right up in this area here. And we actually now follow through outside day from Monday. So this here hopefully might get a little bit of a retest of up to these highs. The market sells off for another couple of days, and then we start to buy the dips. So this is something that's going to be concerning for the short term. Now, again, I always state, for the longer term traders that are out there, if you are a little bit uncomfortable with what's happening, you can buy VIX calls, you can buy them, or you can buy puts very cheap right now. And that's something that you might want to consider, unless you just want to totally ride this out, if it does whatever might take into place here. But anyway, that's the dollar, and I like to see the dollar move up a little bit here. As you can see, we are getting a little bit of momentum going into the upside. We'll see what happens today. Dollar's actually catching a little bit of steam, and we're down a little bit, about 3.5 handles in the pre-market session. All right, let's take a look at our just 10-minute chart to show you where we are. 3 inside days. So really, the sell-off that we've had really hasn't done much of anything other than yesterday. So we had a little bit of a pop, then we sold off yesterday. On Monday, and then today we continued a little bit of a sell-off. So from Friday, that half-day Friday we did sell off a little bit, and now we're just kind of right here. But we're still really inside day for 3 days. So now we're going to see if we retest this area here, the 3-day consolidation we had here from last week, and then test that close on from last Wednesday. That's what I'm looking at right now. I'm obviously looking at yesterday's low. 30-minute chart in the S&P, as you can see, we have that inverted head and shoulders. Again, when I mentioned yesterday that back testing usually is normal. We don't want to get too far below that right shoulder, but a target still is in play, 145.25. So this inverted head and shoulder is still in play, guys. So just to keep that in mind on the longer term. And daily chart. As you can see here, we are above the 200 and the 20-day, but you'll see all of the other major indices that are the leaders, not the followers, which we are here in the S&P 500, have now succumbed to the 200-day moving average and cannot break through and starting to roll over. And that's why I think the S&P will go lower as well if these other sectors do not break out of the 200-day moving average, which I think would be a little hard to do coming from where the market has come the last 6 days. So again, still an inside day for Monday, but again, this 200-day moving average, that 1395 area on the S&P cash is going to be a key area, pivotal point to monitor. Okay, spiders, same thing as you can see here. A little bit of volume came in. As you notice how as we go up, low volume. As we come down, distribution day, heavier selling. So that's not what you want to see. If the market's healthy, you want this to be inverted, the opposite side. But again, same thing with the spiders here. That 38% comes in at 140, rounded off to 140. A break below 140 should have us at least retest that 200-day moving average, coming in at 138.50. IWM, same thing. As you can see here, big move up. To be quite honest, absolutely ridiculous that the Russell would actually run up, and actually was still testing its highs up until late day. We had a little bit of late day sell-off. So I think the Russell is going to be a little bit in trouble here. A break of 80.50 today should send us right back down to the 20, and then obviously right back into this area here. Now, I like to see the Russell come in right around at 78, 79 and a quarter. And then hold that area and then rally back up again, and we can start buying some of the indexes as well. But as you can see here, this is not a follower. It's one of the leaders. It's having problems. It broke back above it, but now back down below it. And the transports can't get above the 20. Reversal candle from yesterday. Again, a break below 90, let's call it. We'll have this starting to test this confluence area of support of 89 and a quarter. Okay, now so that's why I'm looking at. Same thing with the diamonds, below the 200 now, can't break above it. So this is a follower as well. But you can't have the S&P lead and the major leading sectors start to roll over. That's just not going to happen. XLF wanted to show you the banking sector, long-term trend line, back tested it, breaking down, and just closed below the 20-day moving average. So again, we like to see banks lead. And it's okay. I do think that the markets will rally come the next few weeks, but not before a little bit of retrace somewhere back in this area here before we go high. We can't just go up in a straight line. All right, Apple. I said, watch, be careful, guys. Maybe that possible big head and shoulders on a weekly. We're still working on that right shoulder. Again, 622 to 600 to 622 is going to be a big area of resistance, and then I think that it would be. I think sellers will step back in, and then sure enough, that's what we had yesterday. Again, not a big day, still an inside day from my big gap up from Monday, but having a little bit of trouble. That's 600 and then the 622, the 200 and the 50-day moving average. And I like to look at what Apple does, because if Apple has some strength, as you know, heavily weighted in Qs and heavily weighted in the S&P. Take a look at the Qs. As you can see, same thing, underneath the 200-day reversal candle. Now, a close below 64.80 will confirm this reversal candle today. So that's something we're going to be watching too as well. Wanted to show you SMH seasonality. This is coming into strength. So any pullback here, to pick your favorite tech stock and you might want to look to buy that and hold that right into the end of the year and into the first, second week of February. Usually is bullish. So I'll have a few picks for everybody too as well if you want to participate in that. All right, guys, that's really about it. Very, very quiet here, but I do see some fireworks happening quite shortly. So be prepared. Please always have your stops in place. All right. We'll talk to you tomorrow. Have a great day today.